Hi everyone, it's David and welcome back to Safer FX. On the screen this morning, US dollar Japanese yen. Really interesting. It's been a case of history repeating. It's Friday morning, 26th of September 2025, and the yen's had a stellar run for the last 2 days. But that's not really the point of this video update. The purpose of the update is to let you know how I'm now trailing the stop on this position, but also just to show you the uncanny way in which history tends to repeat itself when a market really does want a trend. So for those that have been following along, my previous emails I'll link down below. But this was Wednesday trading in the yen. Price had come down into this contraction pattern. It had started to move around in terms of market expansion, and then it began to trend, and it trended all the way through. I believe that was probably the start of London and all the way probably through New York, most of New York. And then, of course, it paused. And then on Thursday, it paused here again, did ostensibly exactly the same thing, and then it started to trend again. But that's not necessarily the really interesting part. The really interesting part in terms of really pinpointing when a market is about to trend is waiting for a setup and then waiting for the characteristic of the market to change so that you know that the trend's more than likely or not to have occurred. Now, the yen's a beautiful example of this. If I just drop down to the 15 minutes, so this will expand out, obviously. This is exactly the same information, just down on the 15 minute. I want you to cast your eye just in the nature of this pattern here, just as it's turned green here, just when I said it was starting to trend, and then that was part of my initial entry here back on Wednesday. Can you see how the characteristic of that particular little bit of trading there is quite different from anything else that occurred? It'd probably be helpful if I could just move this along for you a bit. Quite different from anything else that was occurring while I was expanding. Okay, so why price was expanding around what then was fair price. I remember mentioning it at the time. I think it was 147,700. Yep, there it is there. Then the market, in terms of the way it traded, its characteristic altered completely. It was no longer oscillating either side of that black line. It was now definitely trending. So hence that was a clue to get in. Initial stop loss was below red, because the red was the expansion envelope. And then once that envelope had finished and it was starting to trend, it should have kept trending. And most importantly, it should have stayed above the black line, which of course it did. It ran up and had its great run up there on a Wednesday. If you come down into this next little pattern, which was yesterday, and this is extremely unfriendly for everyone, but I'll just sneak this along and I'll expand it out so it looks better. Okay, so this is yesterday's trading. Ostensibly did exactly the same thing. So it just consolidated to a point, and then the market started to move either side of what was then going to be its next level of, say, 15-minute money, which is 147, more bigger part, it was 148,800, there or thereabouts, and then almost exactly the same. So the characteristic of the market altered again. It moved up, it started to trend, and then it's very nicely just made this pattern up to the point where it's essentially trading where it's trading at the moment. So the Asian session's only really just been underway for a couple of hours. So there's a bit of volume coming on Asian, but it's not pushing it any higher. There was both London and New York that really drove it in the last, 72 hours. Now, in terms of managing this trade, if I just jump back out to the H1 for everyone, I have been running this up on a H4 price inefficiency level. So H4 price inefficiency would be around about this level now. It'd be around 149, say 500, somewhere in there. However, because it's had these two good runs, I'm going to lock in essentially what essentially was just an intra-session play. It's turned into a multi-day play, which has been great for the risk-return ratio on this particular position. But I've dropped it down to the 1 hour. Okay, so here you can see the candle that's forming up now. The last candle for that candle hasn't overlapped, was actually this big candle back in here. And so I'm using the purple line, which I generally reserve for H4 money, but I'm going to use it for H1 money today. I'll just move around where I want it. I've snuck that right up underneath the current price trading in action, and I've moved my stop loss which is essentially an exit for this position down here to be taken out if it does fail, if it does fall back through here. Look, it could sit, but it is a Friday, and I wouldn't be surprised at all if the larger money, say the weekly money, decides it wants all the stop losses taken out and it reverses all the way down. And I obviously don't want to do that. I just want to lock in, take my money and walk away. So very interesting. Just the way that's set up, it was just a textbook example of just how these patterns in the market, they're repeating all the time and they're happening every single week on just about every time frame. Sure, the larger time frames, you've got to wait longer, you've got to be far more patient. But if you're prepared to get down to the 30, 15 and maybe look a bit quicker sometimes to really fine tune that entry, they're available all the time. So look, if this is something that interests you, please like, subscribe. If you've got a question, leave me a comment below and I'll get back to you. If not, trade safe and I'll see you in the next one.